Today is Wednesday, August 31st. I want to take a look at some of the shorter-term fixed income metrics. This is LIBOR, and yeah, there were some rule changes and the contract did jump, but even without that, or even including that, this is a rising trend, and it makes new high after new high here. So there's something happening. And if we just take a look at the 3-month rate, this is the 3-month T-bill, and you can see a lot of volatility. Now, volatility is relative compared to where it's been. Now I'm going to flip this into a weekly chart, and you'll see that, it's been at this near zero level, in some places going negative for quite some time. Here's the financial crisis. So you can see it's starting to lift off a little bit and stay up there. So something's definitely different here. And if we want to look at that, let's look at the TED spread, which is LIBOR minus the 3-month rate. Waiting for that to draw. You're going to see something very interesting here in that the highs of today are above the peak in 2011. Now, isn't this great? It's not drawing for me. There we go. All right. 2008 crisis, obviously a lot of fear happening here with the TED spread expanding like crazy and then plummeting when rates come down. What I'm going to do is try to get that spike off the screen, and you can see that here's the high in 2011. It's getting pretty close to that level. Now, is this going to be a resistance level? Hard to say. But if it gets through that level, then I think we're going to have some problems. I'm going to put this chart back the way it was. It's going to be a little bit more control on how much data I see. All right, so if it gets above that level, I think we're going to have to see some real trouble telegraphed by the fixed income market here. And just to really drive this home, I'm going to take a look at this here. It's not a perfect chart filling the screen here because it's coming from a different system, but this is the 2s-10 spread, or the 10s-2 spread, or the yield curve. It's the yield on the 10-year Treasury minus the yield on the 2-year. And you can see what the trend is. And it ticked a new low here this week. So that is, I think, bad news. It is showing that fixed income market still doesn't like what's going on. No, it's not anywhere near the flatness, so to speak, that we saw before the last recession. But it's certainly trending that way. So there you have it. LIBOR, TED spread, yield curve. Not looking good right now. And of course, if the Fed is going to raise rates, that's going to bump up the short end, and long end not really going to react. At least that's my opinion. And the trends there are actually still towards lower rates. So it's a flatter yield curve. And that's not good news, especially heading into these spooky months of September and early October.